Hey everybody, what's going on? This is Networkchain, and we're going to go ahead and bring you some of the biggest news stories over the past week as Bitcoin continues to go through its growing pains as it is trading just under 67,000 at time of recording. We are still kind of in that range between 60 and 70,000. We'll get into that a little bit more in a moment. Let's go ahead and do the cryptocurrency market update. You can see Ethereum is currently under $2,000, trading at $1,950. It's down about 3.2% over the past 7 days. We have XRP down nearly 5% at $1.34. Solana down 6% at $82. You have Dogecoin, the largest meme coin of them all, currently trading under 9 cents, down 7%. Then you have Cardano, now back in the top 10, currently down 12%, trading at around 25 cents. So if we look at Bitcoin, given that the U.S., since they started strikes on Iran about a week ago, we saw that Bitcoin did drop temporarily to around 63,000 on the 28th of February. And you can see it started to recover pretty quickly since the geopolitical tensions began over the past week. And now we're seeing that Bitcoin may be starting to form some type of bottom. Obviously, we still need some more time to determine whether that is the case. We did finish the month of February in the negative, so this is now 5 straight months that Bitcoin has traded down to the downside. And the last time that Bitcoin had 5 straight months of downside was between 2018 and 2019, where there actually was a streak of 6 months of negative return. So we're looking to see if Bitcoin will actually turn the trend around and have a positive month of March. Obviously, we still have several weeks to go, but we're definitely going to keep an eye out on that to see if we are going to start to bottom out in this range. But obviously, it could take a lot of time to see whether or not that's going to be the case. We could potentially chop around in this area for several months. We definitely did that back in 2024. And we definitely could do that again, particularly since we are a couple of years after the halving now, and typically 2 years after the halving, Bitcoin does tend to have a bear market, which we are obviously in currently, but it could be extended until later on in 2026. But obviously, there's a lot of things that can happen between now and the end of the year. Obviously, there's a lot going on in the macro environment. We'll go into that a little bit further, but Bitcoin is starting to show some stability, at least right now, between that $60,000 to $70,000 range over the last several weeks and really the last couple of months. So we'll see if it will stay in this range, but obviously time will tell, and we'll continue to keep you posted. So one of the biggest news stories that we're still keeping an eye on when it comes to the crypto market in general, as well as Bitcoin, is when it comes to the Clarity Act. So the Clarity Act is another legislation, a bill that is currently, it passed the House and it's now on the Senate's desk, but it's being stalled basically due to the big banks. A lot of the banks are not very happy with the current way that the legislation has been drawn up, and the crypto legislation has actually gotten a push from the White House, and still, regardless, the banks, particularly those who have lobbied and have spent lots of money backing a lot of these congressmen and women, are really against the current writing of or drafts of this particular bill, because basically if this bill passed as currently drafted, crypto platforms like Coinbase, for example, would be able to offer higher yields off of the use of stablecoins. And so this would obviously potentially draw a lot of interest from the banks, which only basically give you, many of them, 0.5%, sometimes a lot less than that, for holding your deposits in their bank. And now if you move it over to an exchange like Coinbase, for example, and have your stable coins, have your cash transferred over into stable coins, which is tethered to the US dollar 1 to 1, and you're able to get upwards of 4 to 5%. Obviously, a lot of money would be flowing into stable coins and onto these exchanges away from the banks. So the banks definitely have a lot at stake when it comes to this particular legislation. So people are trying to get this across the line before the midterms, and so we're going to see whether or not that's actually going to happen. It's not looking great right now, at least in terms of the timing, so that's another thing that could potentially harm those who are in favor of the current drafting of the Clarity Act. But also another thing that's important about this particular bill is that it actually will give a classification to Bitcoin and under which jurisdiction and which authority it would be regulated under. So if Bitcoin is then regulated under the CFTC, the Commodities Futures and Trading Commission, then no longer would the crypto industry be enforced through the SEC, which is the Security and Exchange Commission, which is the regulator when it comes to equities. And so there would be that classification that Bitcoin would have there. And then also it's going to provide further clarity when it comes to stable coins, the use of stable coins, how they can be regulated. And so, as I mentioned, the banks definitely are having their say. They're holding up the passage of this legislation. And there's a lot of lobbying going on both sides. So depending on whether or not there continues to be an impasse, then this could definitely take some time, particularly if it's not done before the midterm elections later on this year. It could potentially take another year or two, or maybe even longer, depending on the results of the midterms. Also, what we're seeing and keeping an eye on is Bitcoin. The exchanges, the Bitcoin on exchanges, I should say, is reaching lows. And so you can see here in the green, the amount of Bitcoin that was held on exchanges a couple of years ago has now went from 3.4 million down to around 2.4 million on exchanges. And basically what that is an indication of is people who had Bitcoin on exchanges usually are looking to trade Bitcoin, trade in and out of Bitcoin, take profits, things of that nature, or trade into other cryptocurrencies or whatever the case may be. But if they're taking Bitcoin off the exchange, usually they're probably taking it off onto cold storage, for example. And so that is going to shrink the supply that's available on the exchanges, and that also could have an effect on the price of Bitcoin. So we can see that Bitcoin potentially could continue to rise if there's a supply shock that's actually happening on the exchanges, because that's where people go to be able to, trade and buy Bitcoin. So we're definitely going to keep an eye on that in terms of what's happening with the Bitcoin balances on these exchanges. Also, another macro event that is also a part of what happens with Bitcoin and its growing pains. Not only are we waiting to find out what happens from a regulatory perspective, but also the macro environment when it comes to the geopolitics and what's happening over in the Middle East. Also, we have to take a look at the macroeconomics when it comes to inflation and jobs, because Bitcoin is still considered a risk-on asset right now, and it's basically being treated as a risk-on asset. But we did see, because Bitcoin did have a nice bounce up after the initial announcement of the strikes over in the Middle East, we're going to see if it can continue to hold up and maybe even bounce back up to 70. It did reach 70 for a moment earlier the past week, and now we're going to see if it can get back up in that area. If not, at least we're starting to see, and potentially could see, it kind of stay stabilized in this range that it has been in for the last few weeks. One of the major news stories, as you see here, is that the U.S. loses 92,000 jobs in the month of February, which is a complete miss when it comes to the experts and analysts who expected there to be an addition of around anywhere between 50 and 58,000. I've seen numbers range from 50 to 55 to 58,000, but over 50,000 jobs were expected, and we actually lost 92,000. If we look a little bit closer, you can see the sectors that lost the most jobs. You can see healthcare was the most, with 28,000 over the past month. The federal government, and they've had issues since the shutdown last year. There was 10,000 jobs that were lost. Information, 11,000, and transportation and warehousing, 11,000. So we're seeing also that, and we've mentioned as well, that we're seeing layoffs, particularly in a lot of the tech sector and a lot of the major companies like the UPS and Amazon. We've even seen Microsoft, Meta. Some of the major tech companies have been doing layoffs. We talked about Square in one of our last videos. They also are cutting about 40% of their workforce, a lot of it having to do with AI, and also maybe some mismanagement of spending and things of that nature. So we can't blame it all on AI, but we definitely need to understand that we are moving into a new economy. Technology obviously is going to continue to be intertwined into our lives, not only when it comes to our money like Bitcoin and blockchain technology, but also we need to have an understanding of how it's going to affect us in other ways as well. So we're going to continue to keep you posted. Thank you so much for watching. We really appreciate you checking us out every week here at Networkchain. Make sure to check us out on X as well as Instagram. We post there basically every day, and we look forward to linking up with you soon on the Networkchain. In the meantime, take care. Bye-bye.